Boom. We are live, ladies and gentlemen. It is some of our very last days in the Costa Rican jungle, so we're going to be doing another live episode. Today we're going to be going over Bitcoin and crypto trading as we do as per usual, but this time near the middle of the show, what we're going to do is take all of your guys' thoughts, questions, and any of the tokens that you're interested in looking at as best as we can. We'll try to run up to about a half an hour worth of content here, and then answer, well, at least with my opinion, and to the best of my current knowledge, any of the questions you guys might have. So let's, with that in mind, just nice. So not much has changed here on the 15-minute, which is what we're currently looking at on the Bitcoin chart. We ran up on this nice little wedge here, and then as soon as we got tight into the corners, we did start to break down. Although again, obviously these breakdowns are not huge. The momentum of the drop that we had on Bitcoin at this particular price range was from 11,800 down to 11,300. Now this has actually brought us into an interesting area of support and resistance here, and we're in one of those moments now where Bitcoin's going to decide what's going to happen. So one of the things that we've been watching here for the last almost, 2 or 3 weeks since the mid of July here, if I scroll out on the 4-hour chart, it'll actually be easier to see. Since June, around June 20th, we've been in this what I currently believe to be a long forming flag, as well as a fourth wave consolidation. The fact that we may not have seen the fourth wave yet, or the fifth wave yet, is really important to me because again, it leads into the inclination that we might see higher prices quite quickly. Now, in this particular breakdown, the higher prices that we're looking for are upwards between $40,000 to $60,000, and then really it's just the variation of pathways and how we get there. That's been the only, I guess, difference in the conversation. The other choice there was the least likely of the choices, which was that we are in a B wave corrective now. We'd originally thought we would go to a B wave at around $5,000 to $6,000, but when we broke through that, it started to decrease the chances of that being likely. Although the B waves are still important to pay attention to for the main reason that awkward, kind of unhealthy growth in an ecosystem is also usually classified as a B wave for any of those that are studying Elliott wave theory. Again, I guess what we want to do is consistently learn and grow the base of technical and fundamental indicators that we're watching when we're doing this type of stuff, so that it becomes more obvious to us where we are in these patterns as they grow and develop. So if we go out onto the daily chart, and actually, you know what I'll do is I'll highlight one of my good friend's charts here too. Let's see. I think we went over this one with you guys before. He has a very similar contention to us, although I like the way he drew it out here with fractals. We came to the same conclusion with different indicators, but I really like this play out here that he has here as well. And this has a higher price range coming in near the mid of 2020. Now, I'm not sure how far I would follow this cycle, but I definitely think that the cycle up to this point here around 7,700 is important. Now, where that C wave actually takes place might drastically be different. I think we could actually hit that C wave closer to the mid of September here for around 7,700. But unless we break out of these very distinct areas, again, we see this lower B wave following the fractal pattern almost to the T, so great work on this one. BTC dyslexic, again, I think we came to the very same answer here, just with a different set of indicators to bring us to that answer, which I always like. It's if we can come to the same fundamental conclusion by using a different mathematical process to get to that end of the equation, it's always highly valuable. So again, I am sitting in this camp here, although I do think we will see the C wave much closer to the mid of September here, with this drop down likely bringing us lower into the $8,300 to $7,700 area. Again, almost identical to our particular areas of conjecture. Again, we came to this particular area because on the daily we have, on the weekly charts here, as we've gone over with the bear family a few times before, we have this very specific tight group and between your 21-day moving average at around 8,400, and at the bottom of that and on the top of the cloud is around 7,500. Again, so when we find that we have aligning values with other analysts that we trust and we enjoy, and just to watch this stuff too, I mean, I think he did a fantastic job here with the playback button of yes, his fractal mathematics here, so you can actually watch the B wave take place. I think this is really nice to pay attention to, again, because we're following those same lines, but just looking at it from a different angle here. And so to get the same results is always, I think, fascinating. It's like having a plasma physicist and an atmospheric physicists come up with the same answer using different fundamental, I guess, indicators for their mathematics. So I still sit in the camp that I believe we're going to see consolidation into September, into the end of this triangle here, before we see final extensions up into the $50,000 area. Again, the only way that this wouldn't be the case is if we actually break below 7,500 and lower, that we could see a much larger corrective wave, which means this wasn't a fourth wave, right? So I currently am in the ballpark of thinking that we are in a fourth wave corrective. A lot of other analysts think that we have already done the fifth. So if this is and I'll show you what it would look like if this was the fifth. So if we had the 1, a 2, a 3, a 4, a 5 here, it's likely that we would actually retrace much further down than we have if this was a fifth wave. I would actually put us almost as low as 6,600 to 5,400 if that was the end of a fifth wave on average. Now, again, this has been a fairly unhealthy market growth, so I don't want to make too much speculation on what it's going to do other than following the minutia much more closely than I guess more close than normal. Like for us to have made our projection for around 7,500 to 8,300 in the middle of June, and I've stuck beside that thesis. I haven't budged once. Our notes for the private bear members have stayed exactly the same. Whereas when you listen to, I guess, the hype and the FUD that comes in the markets, as soon as we started to go up again from 9,000 over here, everyone's like, oh, we're going to 20,000. It's going to break out again, and you start to get that moment. This is the feeling of the masses, and it's a really hard thing to try to separate ourselves from, because we also don't want to miss out, right? You don't want to be wrong, but putting your name on something like this is actually relatively difficult to do. To be, to go out here, make an assessment, to be held accountable, whether we're right or wrong. Look, we might be wrong. Maybe we break out of the top of this triangle here, and we continue higher. Again, we're under a few downward pressure lines now, so it's mostly a matter of time until we see a further breakout. Now, again, there's a few different conclusions that we can come to, and for those of you that are part of the private Bear Den members, you know that I think there's only 3 options that are on the table. I loosely laid them out in some of our previous videos here, but essentially, again, with Bitcoin's price movement, I think the average person needs to be reminded that my current conjecture in this space is that I think Bitcoin is going to millions of dollars over the course of the next few years, and if not millions, at least hundreds of thousands. So with that type of conjecture in mind, what's important is that even though I like trading, I like the technical analysis side of things, this is all a very compressed minutia form of thinking, right? So even though there's low targets around $6,600, I think the average person isn't really A, going to be good at trading, or B, understand a lot of the fundamentals that go into trading and speculation at a high level. So the best thing to do, I think, is also consistently reiterate in my story and my sharing with you guys that averaging in to investments is a great way to go. For instance, in early 2000, if you thought Amazon was a good idea, you don't just wait for the very bottom. Every time you have an excess or a spillover in your savings and the ability for you to produce, you would maybe have bought more Amazon stock at that particular time. Instead of just going, I'm going all in on Amazon, I believe in Amazon until the very end. That's maybe not the greatest way to go. And I think a lot of people get caught out in emotional flares this way when they're investing. And because of that, one of the things I like to come back to now is understanding that with so many variations of investors or speculators or traders that might end up watching these, is to remind everyone that if you're interested in acquiring Bitcoin, don't just wait for the perfect price. If you've never bought any before, going out and buying $10 now is going to be such a huge investment on your part, not because of the $10, but because of the energy and time that you're spending into understanding these technologies, what they're worth, and why they're so valuable, is probably the first hurdle that most people don't overcome. So I just wanted to put that back on the list, because I know, in the past, because we go into trading and charting, a lot of people get too caught up in the minutia of the daily stuff that we're looking at. Like I said, again, here on the daily, we have lows of around 69 to 6,000, which could potentially come in, especially if this is the fifth wave, but it's not a fifth wave. People start to create their own story about what it is that's happening. I'm like, oh, it's going to go lower, I'm just going to wait. but a lot of people have never purchased Bitcoin. So again, remember, I bought my first Bitcoin at $90 because we needed it for business. I bought Bitcoin again later on $1,000, and again later on when it came up again at $1,000 again. So I've had a consistent basis with showing up in this ecosystem and knowing the difference between my particular investment strategy and my love for trading and speculation. Because and again, one of the reasons why I love trading and speculation is because of the sheer amount of volatility that's going on in these ecosystems because of the birth of a new place to trade, right? The fact that we see 24-hour, 7-day-a-week trading has never been, that just period. This is such a huge thing to be a part of that I love diving in here. It's one of the reasons why I only trade versus Bitcoin's price as well, is because I think that this is the new form of money. I believe that Bitcoin is going to become the new form of money. So if I want to make more money, why would I chart in US dollars? Especially because if you look at the US dollar chart, I mean, USD birthday chart, I'm pretty sure we'll see a bunch of these declines in the US dollar price, dollar decline. I don't know if the people understand. I'm not going to find it very easily. But anyways, for those of you that know have been charting the US dollar, it has lost most of its value, if not almost all of it since its inception. So why would I want to chart versus a failing asset in terms of a rising asset price? This is the thing I think that a lot of traders overlook, or even investors, is that I do not care in any way, shape, or form what other tokens are priced at in US dollar price, because that is a declining and failing asset. I've already set in stone in my mind that Bitcoin is going to become the new hyperactive asset, and if I want to acquire more wealth, I need to acquire more Bitcoin. And that's a really difficult game to play because, well, there's lots of times where you're going to have to understand that your life costs money, right? So as an investor, as a speculator, as someone who likes to build business or grow, you're going to be using your assets to try to build out the rest of your life. It's not like you just get $1 million and you sit on it. No, a lot of the times people go belly up after having been moderately successful and then keep going and become even more successful, because you have to try and spend a lot of money, or at this point, I guess, fail at a very high level to do something that might be noticeable to everyone. So again, it's not like you make a bunch of money and just sit on it. Those that do usually never become very successful, because it's your ability to actually implement these new levels of, I guess, economic energy and move it into something that creates more value for not only self but for the others around you as well. So when I'm charting Bitcoin, the reason I chart in BTC price is because I'm really interested in growing my portfolio in Bitcoin terms, not in US dollar terms. Because if I know that we can go, look, for those of you that have been watching the show for a long time, you know that some of the previous business stuff that we've done, you can make hundreds of thousands of dollars a month, which is multiple over a 10x gain just by building a business. So if we want to make US dollars, why don't we just build a business that has statistically been able to do that time and time again, as in comparison with trading in these ecosystems and understanding the value of the birthplace of an entirely new potential like stock market. I can't get over how important it is to keep learning about this as it grows, because even though we might see these unhealthy movements in Bitcoin that don't make a whole lot of sense, they're difficult to chart, we are going to become better and better at it, and we will be some of the people that are at the very forefront of what's considered a historic and monumental change and moment when we start to look back. And that is, to me, is so valuable, because very rarely do you get to see the birth of the internet. And I was around for it when I was younger, but I in no way had any energy or care to capitalize on it. And now that I know these types of waves hold so much momentum, it's one of my main interests, is how do I learn more and capitalize on understanding this technology and the waves that these technologies create. And one of the waves that these technologies are creating is seemingly an entirely new stock market. You know, again, so for the Bear family, we have been charting and trading with Matic the last 2 days now. Switched back over from Raven just because we are seeing 6 to 7% jumps in Matic on a very short time period, and this is all off the consolidation of Bitcoin. As soon as Bitcoin started to consolidate, we were able to pull off, just from last night into the morning, almost a 12% gain. You know, run with a type stop loss, take a profit here. You don't see anything like this in the traditional markets unless you're trading in the penny stock world. And even though we might be able to find a loose comparison just because of the gains into the penny stock space, once you go in and you actually do any valuable research into what companies these are, what tokens are being created. So for instance, I'll drag this screen over here. I hope we can see this now. So here we go. This for those of you that were wondering how we run into some of the work that we're doing, Matic here is on the Binance research board. You can go in and you can do a bunch of deep dive research into some of the tokens that are currently out there right now. And again, what's important here is that there's going to be wild speculation in any ecosystem. It's healthy. It actually helps it grow. It's one of the things I've never understood about the Bitcoin maximalist side of things is the fact that this entire ecosystem is actually helping Bitcoin grow. It's not just taking away from it. Although, yes, in 2017, a lot of the speculation ran into other areas. That's fine. They're actually growing as an entirety. I mean, the ocean doesn't look at the lakes, rivers, and streams and say, oh, you're stealing my momentum. Inevitably, that extra flow ends up back in the ocean. And if we're going to compare Bitcoin as the ocean, some of these other alternative tokens and currencies to something like the rivers and the lakes that are on the planet, they're extremely important for the entire water or financial cycle. And that's one of the reasons why I'm so profoundly interested in the growth of this is because we have never seen anything like it. One of the reasons why I show up daily, even if I'm not in an active trade, like I took an active trade in Matic last night, but I hadn't for the last few days because I'm busy packing up for Costa Rica. But just even watching this express itself, here we see a 50% gain in less than a day, right? 1 day, 23 hours. Sorry, it's just over a little under 2 days. That's huge. And I don't think that this is done in any way, shape, or form. And to the point where if we go out even a little further, we give Matic the run of the doubt for where it had been in the last 48 hours. Here we see a bottom to top wick of 80%. And we saw the bottom come in. We saw these lower highs start to develop, a bullish divergence on the lower time frames. Again, what's really nice here is that as a trader and as an investor, or at least someone that's learning how to trade. Let's always remember that we're always consistently students, but it's from someone that's learning how to trade. Always, we have a characterized speculative movement that takes place like exponentially faster than it used to in the old markets, where the old markets shut down for the nighttime and the weekends. These markets develop on every side of the world at every moment, at every second of the day. And that is something that is, again, so profound in the markets that I don't really think we've even taken in that type of difference to the world that we are coming from. And over the course of the next few years, what's again, even just from an educational standpoint, is learning how these markets interact, because it's going to change the game for decades to come. Anyways, I'm a huge proponent of Bitcoin. I will dive in and take a look at any of your guys' questions. So if you want to leave those questions up on the board, we've been having a little bit of trouble. YouTube is basically started to shadow ban our videos for some reason. It's always a little disconcerting to see as well, to watch our views go from 3,000 down to 300 for no particular reason. Very, very noticeable. So I'm a little hurt and upset by that. But I guess on the bright side, for any of you that are interested in staying up to date with us, please go to arcanebear.com and sign up for our free newsletter. That way, no matter what happens, we always have a way to send you guys some content as well. You can join our Facebook groups, our Telegram groups, which are in the links below. And for any of you that are interested in learning how to prosper and thrive through these coming economic collapses, you can sign up for our private newsletter. We do release a lot of educational content that has helped a lot of people right from the get-go. We've got a lot of positive feedback. I don't have any of the testimonials open here right now, but even still, I think for those of you that are new to this space, if you're trying to trade and you don't use a stop loss, you failed. This is a prime example for Litecoin. Here I've got Litecoin open up on the daily chart now. And one of the things that we had pointed out with Litecoin over the previous weeks is that almost all the Bear family members exited somewhere around 17,000 Satoshis and 15,000 Satoshis. My particular exit was at 15,000. I'm always seem to be apparently a little more conservative, but I think that's just in general part of my nature is to be a bit more conservative. What's nice here, or what's interesting, is we don't see bullish divergence. We actually see a lower low on the RSI here versus the previous space as well. So we'll have to look for a potential other variation of this bottom on Litecoin. But again, if you're not trading, I mean, if you're just active, I mean, and again, this is trade in this channel. To think that it would break out of this channel, especially as the more time we spend in this channel, the more likely it is that we will continue to remain in this channel. That's a fairly fundamental analysis for statistics on a broad spectrum, and there's lots of scientists who agree with this type of idea. I mean, you can read quotes from all sorts of philosophers as well. It's not just in the mathematics space. The longer you don't do something, the more likely it is that you will not ever do it. So again, what's important here is to recognize that there is a difference between these ideas, and we really want to take up the statistical averages to understand what is our potential for long-term success here. Now, for long-term success, Litecoin looks amazing for short-term swing trades, because versus Bitcoin, you might be able to not have a leverage bet in your pocket and be able to pull off 120% gains in less than half a year. This is unheard of in the old hedge fund system. And again, this is why trading on 24/7 markets is so interesting and so valuable to me, is because I think this is going to continue, because I believe Bitcoin is going to millions of dollars. So I see a few of you guys are asking questions. What's a good way to trade in and out of Bitcoin on Coinbase? I don't think that trading in and out of Bitcoin to like US dollars is a smart idea. What I do is I actually wait for Bitcoin to consolidate, and then I look for growth tokens. Again, if you're interested in like a really in-depth thesis of how we do our swing trade strategies, I suggest you sign up to the private bear den, because it's like 15 to 20 pages of in-depth and thick content that's very valuable. You could read it multiple times over. For the last 3 months, it has held its thesis water, which is very difficult to do. Most analysts change their mind every few days. We pick our targets, and we've been fairly consistent with being able to reach those on multiple month events. Like even standing by my Bitcoin exit around 13,000 and aiming for 7,000, most people change as soon as the price starts to go up. Oh, we're bullish again. It's going to 50,000. And yes, look, I do agree. And this is one of the interesting things, is just understanding the difference in time frames. So my suggestion here is not to trade in and out of Bitcoin on Coinbase. I think depending on how much you have. Now, if you already have an investment strategy with Bitcoin, which is where I believe the HODL term has only any sense of holding water here, is just be patient with Bitcoin. If you're interested in trading, the majority of what I would do is put your money into education first, let alone making trades. Most people will fail because they don't enter with a stop loss, and all of a sudden 10% of their portfolio is gone, and then they're trying to chase it, and then 20% is gone, and then they chase even more, and they're sweating. Oh my God, if I had just sat, they would have had, and then they lose even more because they have no strategy in place to be successful, which means you have to know how to take a loss, and the stop loss is one of the greatest ways to teach you that right out the gate, so you can take a small loss and come back with much bigger gains. What do you think of WireX and Revolt? WireX used to be a great company. They've gone a little overboard in the last little while, and I haven't seen any products or services that have come out from their area that are valuable to me as a global customer. But again, that's under the idea that they are only currently operating out of the EU, and that doesn't do me a whole lot of good because I live in Latin America and spend a lot of time in Asia. So none of those things are useful to me. So that's, I mean, and I don't know what Revolut is. Revolut. Your digital banking alternative services, prepaid debit card, currency, crypto exchange. Well, again, these are intermediaries. You know, I think we obviously need this type of stuff for the ecosystem to grow at large. Again, you know, having easy ways to use these assets. And again, it's one of the interesting conversations about Bitcoin as a money or a currency is currently its volatile use case is actually in going up in value, and that's what's allowed the whole ecosystem as itself to grow. We're one of the reasons why there's so many investments going into other chains and other technologies and understanding this space is because Bitcoin provides that financial backing and base for a lot of people to do it. So again, I think the important part, aside from whether WireX or Revolut are providing these intermediary processes to use a regular banking card, it's just a stepping stone into the potential inevitability that, okay, you can just use your phone to pay. If I want to send Bitcoin from my bank, and when I say bank, I mean like one of these things. For those of you that don't know what like if I said what a bank might be, it's like a big block version of a storage case. You can take the batteries out. There's no way to connect it to USB. It's all private NFC, Bluetooth password type stuff. You know, you want to send it from your bank, and then you send it over to your phone. You go out for the day with your like however much cash you spend in a day. And then go from there. So I think, you know, a lot of it is just kind of reinventing the way we look at the technology that we're using, and that the stepping stones of these like Revolut and WireX to, you know, to have a card that you can use to actually, you know, to quickly try to spend Bitcoin is important, because again, when Bitcoin's up at $20,000, a lot of you should probably be spending it on debt, repaying off your debt, or buying property, or diversifying into other assets, or starting your own businesses. And that's what a lot of people don't do, is when things get really high, they don't sell. And that's the other really important part and parcel here, is that not just taking a small loss on a trade, but learning how to take profit and actually, you know, use that money and disseminate the economic energy that you have to accomplish other things in your life at the particular time that it's needed. Fabrizio says, what exchange would you suggest since Binance is closing the doors to the United States? You know, for a lot of our Bear family, that's part of what this next month's newsletter is going to go over, looking what to do in that case. A lot of our core tokens that we've been swing trading are removed for a lot of the US customers. So we're going to look at aggregating another few tokens that are from the new list, because they did offer us a list of all the tokens that they are going to approve. United States Binance tokens. We've been found those in our Telegram channel. Someone posted a screenshot of all the tokens. I do forget the names. Major tokens under consideration will include Bitcoin, EOS, Mana, 88, Dash, IOTA. Raven was on there too, as far as I had seen. ETH, LTC. ZRX, Zilliqa. So right off the bat, I could see Zilliqa was one of the other ones that we had been watching. Mana is interesting, mostly because of the decentralization. BAT, I think, has a lot of potential for it as well. Obviously, Binance is another token, although Binance is always a little tricky to say. They sit in a very interesting part of the regulations and regulatory body changeovers that could be difficult. Obviously, this is one of the reasons why they're opening up a different exchange in the United States, is because of the regulations. So here we can see a list of the tokens that they're currently exploring to have on Binance.us. Again, this is important here is because it's actually very easy for us to build a swing trade portfolio for just the United States directives. I mean, we've got Raven, Mana, Zil, I hate to say this, BCH, BAT, and Binance as well. And LTC actually even fits in the same baby BTC world that we had with Raven. You know, so there's enough here that there's and Link. I didn't see Link there, but there's enough here to build a fairly solid foundation of speculative assets to build a swing portfolio out of. And again, here, what people commonly also mistake is that, look, when we're following a token like Raven, even though I'm jumping in and day out for day trades for a few percent here and there on the sheer momentum of these tokens, what we're really interested in is you guys learning how to get in at bottoms here and get out at tops here. And I don't believe that this is done yet. I don't believe that we are. This is the last time we see these things in this ecosystem. So just the way we did in November, we capitalized on almost 300% of a gain on Raven, and we've done that. And that was the second time the Bear family had done it. So the private Bear notes have been exponential for some people's portfolios, because if you get in and get out, even for a portion of this ride, you're doing really, really well in terms of what an average portfolio or what an average hedge fund can pull off. And again, that's the thing that I think is important, is that one of the reasons why I make a lot of small day trades, you know, I'm like, oh, I lost 1% there, made 4% there, I lost another 1% there, made 4% there. It's just the consistency of getting used to getting in and getting out all the time, because it means I'm less exposed and I have more time to, I guess, play around and understand, because it's really difficult when you're at the top Raven is a perfect example. For any of you that have been in the bear den long enough to remember, when Raven was up at its highs, I sold it around 11,000 Satoshis, and everyone's like, oh no, you're so silly, it's going so much higher. And look, it did. It went 25% higher, 30, almost 40% higher on the course of a very short time frame from where I got out. It's actually more noticeable where I got out because there's a stagnation period that I was in, that I jumped out at here. Yeah, right around here, right around this bottom, the top of this stagnation, and the bottom of here is right around where I exited. I leveled out here, but as you can see, there was multiple times to exit here. I exited on the way up because I'm more interested in less risk as we're going up this high. Once we go up this high, we know we're coming down lower again, right? So this type of trading is, you only need one of these a year. Look, if you even, again, if you caught even a percentage of this, 300%, if you put, say you put down $10,000, you're at a 300% gain, you're coming out if you're very excited about your investment portfolio or your trading portfolio for the year. Not just your investment, but your trading. And again, that's why there's such a big difference between these two, is because you have to learn how to get the fuck out of a token once it's done this, and most people don't. Most people, this is where all the people are like, the moon boys start to show up. It's going to $1. Raven's going to be worth $1. You just wait. And it might be in the future. That might be the case. But we do know that anytime we see these exponential movements, it's time to get out. And swing trading has done us pretty decently for that. Although, like I said, the importance here is also to learn how to use a stop loss, because say you got in at the moon boy moment, right? Say you bought anywhere here. You're thinking that Raven's going to go up. And right, you're like, oh yeah, look at it, it's bottoming. Wow, this is just, someone's been telling you that this is the third wave, right? They're like, oh look, see, it went one wave, two wave, three wave, and this is the fourth wave, and it's gonna go fifth wave. Because I had actually thought that might be the case too. I was like, cool, we might see a fifth wave here. Let's keep an eye on if we can break out. And as soon as we couldn't get above the 21-day moving average, I was like, oh, well then this is done. And we re-exited a small position. We actually done a nice day trade off this, for those of you that have been part of the bear den for that long. And it was a lot of fun. And again, even here, more recently with Raven, we pulled off another 30% gain off this little jump here. We'd been watching for it because from a fractal perspective, we saw that this had happened here before. And look, it like clockwork, it happened almost again. And I think Raven is consolidating into its final areas. I think that what we're seeing here is the last final bump akin to here. So I'll draw this out. I think what we're seeing here is very similar to what we're seeing here. I think that these are fractals of each other, just the way that this one was of this top up here. And I think because of the big whales that are moving in and out of Raven, that we're going to see this potentially again. So one of the fun things about the private bear den is that you don't need to be day trading every moment. You don't need to be swing trading or longing or shorting. If you know how to play this game, you only need to do this once. And we saw this come in twice. We followed this token twice. That's pretty. It's hard to express how much value that can be, even if a small trade, right? You put in $1,000, you're coming out with a 3 to 600% gain. You're really stoked because there was not a lot of risk on the table to see such a massive potential in return. And again, that's what I want to remind everyone here too, is that one of the reasons why, like if you're in the private bear den, you see me, I'm like, oh, I got in Matic at 125, I'm out at 136. I'm only taking a few percentage here because I don't want that much exposure to speculation. I want to be able to go in for a few hours, make a trade, get out. Because what I'm really concerned about is following my strategy. Can I enter, put a stop loss in, and then get out? Whether that's a stop loss or that's in profit, strategy executed. And that's really what you're looking for, is the consistency of your strategy executed. Because then that way you can win over time. And this is a game about winning over time, because if you didn't execute a stop loss, you didn't follow a strategy, and now all of a sudden you've been holding Raven since 12,000 Satoshis or something crazy, it's down to 321 Satoshis. It's very difficult because you need to know what you're doing to be able to play properly and to not get wrecked and playing this game for a long time. So even though I think there's a massive amount of possibility in Raven, if you follow the Moon Boy hype, you're often going to get screwed. This is another reason why signals groups are generally such a waste of time and money, is because if you don't have the tools and the access to the community or the information that's valuable enough to get you out of the market, you're not going to. Or you're going to run without a stop loss, and they might have been wrong. Signals can turn sharp the other way very quickly, and now you're sitting on a 70% loss because you didn't use a stop loss. And so instead of taking a 1% loss and you were aiming at a 60, whatever you thought would happen, like another 100%, whatever your speculation was for even entering in the first place, you get hurt. So one of our main things we try to do is really bound and beat the shit out of that stop loss drum now, so people can understand. So getting into a little more of the depth of Raven here, because Raven is included in our I guess what will become our US termed sheet here. It's crossing over and underneath on the daily right now, which is not a great sign. We want to watch really closely on the Eagle's Nest here for any further developments. But if we look at the fractal patterns of where what Raven had done before, it seems likely that we're going to fill all the way to the bottom of around 290 to 270. And then once we do that, we see like a total drop off, and we see this bullish divergence again here. I mean, you know what's interesting? We actually see a bullish divergence here too, forming on the daily. So for those of you that don't know, this is actually a really nice indicator. We see it's not super strong, but as you see, we have a bullish divergence here as and the opposite line here, right? So you have the trend lines that oppose each other. It's not a super strong opposition right now. So if I actually drag this up, you can see it a little more clearly, I think. We'll close the Eagle's Nest. There we go. So here you can see we have a rising RSI versus a falling price. This is actually indicative of a bull market coming. Again, this might be part of the alt season that we're looking for, but again, this would also lead in the fact that if we are going to consolidate on Bitcoin into the $7,000 area, which I still stand by that preface, then these potentials become much more likely, and keeping a close eye on Raven for a potential even if we just jumped up to the top of the bear claw here, we're talking about a 60 to 110% potential on Raven once it's bottomed out. And again, that's just to the bear claw edge. So anyways, I'm going to leave it at that. Thank you guys all for joining us today. I have one more question here. Alex Carpenter says, that's what happened to me for Litecoin. I got wrecked holding during the halving and didn't get out at all, 140, and just held it. Yeah, it's really important that's why I constantly bang the drum about A, stop losses, and B, charting in Bitcoin, because otherwise people just get wrecked. So anyways, we'll leave it at that. If you guys are interested in learning how to survive and prosper with your portfolio, your business development as time goes on through these markets, sign up for the private bear den. It's only $30 a month, which is a very, very good price for the level of content that you get out of each of these thesis papers. It's quite a bit different than most newsletters. We put a lot of work into it. We also have the free newsletter, so if you want to try out some of the free information we give away, you can go to www.arcanebear.com and just scroll into the mid-range and sign up for our newsletter. We do try to do 1 or 2 releases a month. We try to give away some free PDFs about, here's some cool candlestick patterns that we like, this type of stuff. So sign up for that if you want to give the free stuff a shout. And also, again, because YouTube seems to be throttling our views quite noticeably, the best thing to do is to join us on Telegram, join us on Facebook, join us on our newsletter, follow us on TradingView, download our TradingView indicators, because at least that way, if YouTube does start to throttle us, which seems to be the case, there's a way that we can all stay in contact and continue to grow the Arcane Bear family. Although I am hoping this is just a glitch in the system, the fact that it's continued to keep its thumb held down on us, and very noticeably so, in terms of the reach of each of the videos over the last week or two. And I'm not the only content creator either. I went on Reddit and I found hundreds and hundreds and hundreds of content creators who are having the same thing. Some of them have upwards of hundreds of thousands of followers as well. So YouTube is definitely doing some shady shit. It makes me upset that we can't bring them to court with some class action lawsuit that they've been ripping us off for our advertising dollars and da-da-da-da-da. But this is the thing, when companies get too big, it leaves us very little choice. So if something is going to be developing, it's likely the exchange of a new blockchain, social media type idea, where we are actually rewarded properly for our content, and it's all visible on the blockchain. Each of the views is registered via the chain as well. So I have a lot of future looking momentum for some of this stuff. That's why you can find us on DLive, Twitch, Mixer soon, Facebook, all of these areas, because we're just trying to figure out what the hell is going on, I think, just like everybody else. Anyways, this is T with the Arcane Bear. Thank you all for joining us. Give us the thumbs up if you like this content. Thumbs down if you do not. Leave your questions, your comments in the thought below, and I do my best to try to answer everyone Unless you just say ridiculous stuff, then I just ignore your comments nowadays because it's much easier on my mind. Again, thank you guys all for joining us, and we'll leave you out with our cute little bear intro. Ooh.